Here we are.
We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Here we go.
It's Friday.
Fresh, funky funk. We're bringing it down right. Yes, sir. Let's do a little camera shape. Show me your... Come on, you're on the Jumbotron. There's your moves.
You're on the Jumbotron. There you go.
Guys, it's Friday. It wasn't an easy week, but we are here to serve, right?
That's right.
That's right.
Bringing the
Serve
truth.
to our fullest, best, and fullest knowledge that we can bring to you here on a Friday and get active.
Get active. I like that.
I don't know where I was going with it. I was trying to hype it up, and I kind of lost it and just kept going.
It was almost like that marketing campaign for, kids doing sports. Get active.
Get active. Yeah.
I love that little back popper. I feel like I should be revving up a chainsaw.
That's a good point, since we are chopping down your mortgage. How to beat it out, cut it out, take care of it.
What?
Ripping up the chainsaw to chop down your mortgage. That's what we're bringing to you here live on Friday's MLO show.
As the self-assessed king of horrible analogies, that was really good.
I mean, yeah, it was really good.
Oh, thank God it's Friday.
We are absolutely loving it. And anyone tuning in right now, whether you are listening or watching, we sincerely appreciate it. You are tuning in live here, studio broadcast from MLO. We got the full crew clocking in OT for MLO, and my name is Nett. We have the dynamic trio, the Three Musketeers. I'm going to introduce CK.
How's
CK,
everybody doing
say
today?
What up to the people?
Hey, folks. Here today in the MLO, we are taking the beats and driving it all day long and talking about how we can get that mortgage paid off a little bit sooner. So this is a great episode. I have a lot of clients coming in at me with this question day in, day out. And so Addie, AC, we're all here to talk about some strategies, some tips, some tricks.
Yeah, and on that note, let's bring it over to you-know-who, KC.
Yes, sir. Casey Carpenter, you guys' Navy vet, but we are going to give you some nuggets here today, so pay attention and listen in.
This is good stuff, and we like to remind everyone, guys, if you want to participate in the show, please comment, like, subscribe, whatever you got to do. Shoot us a message. We got your back when it comes to any of your home financing needs on the West Coast here. And guys, we've got our national audience, so we had some great reach outs just yesterday of people that aren't even in our local market, and we're helping those people iron it out, whether it's working with us or another team. We are in full support, so make sure to hit up that VIP line, right, guys? Because we got your back.
For sure. And what's that number again?
I got the 503.
VIP
9038.
That's right. We're dropping it hot, and it's straightforward. If you hit that number, you get a direct text to all three of us and the extended team that's not broadcasted. So we got you guys. We're quick to respond, and I just want to remind everyone.
And I love the fact you brought that up, guys. Listening and watching, like literally, we have people reaching out that aren't in our markets, and we're helping them just answer simple questions about the transaction that they have going on. And it's a huge benefit for them, right, guys?
It's almost like insider trading.
It's almost like just having good knowledge at your fingertips.
That's what we do. That's what we do. And rolling into the subject, though, how to pay off your mortgage early. This is a big one, guys. And I hope the boys over here can prevent me from getting into any rants, because I get hot to trot, especially when there's, multi-million-dollar social media presences out there making a crap ton of money just for advertising off the basic premises of paying your mortgage off early, or, in this order, you could become rich by not extending yourself on credit debt, keeping your job, and paying your bills. Oh, my gosh.
100.
Was that just an earthquake?
It was.
No kidding. I mean, there's a couple of carpool lane passes for all those that maybe grew up on the streets and didn't have a family, but the rest of us, like common sense, right? But in all seriousness, though, how to pay off your mortgage early, because it does take some discipline. It's one of those theories, guys, where like everyone talks about it and not a lot of people do it. It's like, oh, on this wedding budget, we're only going to spend $4,000. Not happening.
I'd like to know what the statistic is for people when they are, because we've all heard it and gone through it when we're doing our consultations and stuff when we're talking with clients. What is that statistic of people that, it's like, hey, okay, that's our payment. And, we do plan at maybe throwing a couple hundred at it, because we've all heard, our clients say that. It'd be interesting to know how many have started with that idea and then how many actually are following through with it. That's just out there, but it'd be interesting. I bet you 90% have that motivation or determined to pay it off faster, but 25% are or something, right?
Yeah, I think Addie nailed it. It's the discipline and kind of understanding the figures and just going through the process with your advisor. It could be with myself, a mortgage advisor, or your financial advisor. But the nice thing about numbers is they don't lie. They're straightforward, and we can come up with a game plan that's going to help design a outlet of you saying, hey, I want to retire by this date, and I want my home to be paid off at this month on this year. We can tell you to the penny exactly how that can be accomplished, just through simple amortization tables and breaking it down. Now, things are going to change all the time, throughout life, and so that gives you some flexibility of saying, hey, yes, I can catch back up when I get that bonus or tax returns come back. So there's so many different strategies put in place, but we want to talk about those and prepare you to take advantage of, paying less interest throughout the years. That's going to save you so much money in the long run that could be put towards other investments.
Great. Excellent. Nailed it. I'd say diving right into it, a couple prefaces before we hit the real bullet points, guys, is a lot of this is going to be contingent upon what your loan amount is. So it's going to be different. There's going to be variables for everyone, because someone who not all loans are created equal, in the sense that a $400,000 loan might have a lot more savings, a lot more accelerated payoffs than, say, a $150,000 loan. So if you're in the Midwest, if you've been in your home for 20 years versus just bought last year, you're going to have way different dynamics in interest savings and payment adjusters on new interest rates and costs associated. So just note that, compliantly speaking, and then just straight up, there's going to be some differences based on the loan amount. So let's just put that out there, depending on how much you owe and the market that you're in, there's going to be some differences. But I think rolling into our point number one, I'm going to back end it with an early book up. Not book in, a book up. Do you like that?
A switch.
We're going to go with a little story time. So I'll do a personal story time.
I love it.
So for us, when we bought our most recent primary, it was a $537,000 purchase. We originally went in at 10% down, right? Market was really, really, really not so hot. This is like a year and 8 months ago.
Got it.
So we got in, even with all the abilities that we have, we were in the mid fours on an interest rate. And this was great credit, decent down payment, right? So my whole plan was hey, let's get into this market right now because there's less buyers, right? And I'm intentionally going to refinance. So when I refinanced last year in October, I was able to move that mid 4 down to a 3.625 and adjust my total payments by approximately $275. That's a huge move. That is a absolute
nice chunk of cheese you're saving.
That's a big one over the long end of stuff. So that's just a little bit of, for all those people who are getting discouraged in the hot market, don't be afraid. Don't be afraid. Yeah. Maybe with September and fall rolling in, the terms might go up a little bit, might go down. That being said, you can make a big difference in refinancing and understanding. And these guys are probably like, oh my gosh, Addie is being pro refi, which is very, very rare for me as a mortgage advisor. But if you plan it out and step it's a big one, guys. So there's a big difference in just your ability to refinance or that payment. So what I did, moral of the story, I didn't just lower how much was coming out of my automatic payments. I took that extra chunk of cheese, rolled it up to 300 and applied it right to principal. right to principal. So what does that do for me on a 30-year fix? It approximately cuts my term down 5.7 years. So I just turned my 30-year fix into a 25-year fix. And the way that I look at it, guys, is I'm 5 years closer to retiring.
Yeah, you are.
Even though I've got a more dynamic strategy of that with our portfolio, my wife and I, but it's like, that's my motivation ticker. It's like 5 more years till I get to maybe just say, sayonara, I'm playing golf every day, right?
Yeah, for sure, for sure.
So that's a big one, though, on like an estimated 450 to 475. And these are all estimates, you know. You're looking at an extra $200-$300 a month toward the payment, which I got from refinancing, has accelerated my payoff roughly 5 to 6 years.
Yeah, that's so cool.
On. Are you kidding?
Yeah,
me?
I mean, when you're looking at that in a total run of everything, that's well over $75,000 to $100,000 in interest savings, probably right there.
Easily.
And like you said, with the loan amounts, depending on now, if you have a $100,000 loan amount, you might see maybe $100 savings that you're going to be putting back. And it might not make sense through the cost of the refinance. But when we're looking at an average, $300,000 loan amount, let's say you purchased last year when interest rates were at 4.25%, your interest that's going on that $1,475 payment, that's what 4.25% is on 300,000. You're paying $1,055 after 12 months in interest, and only $421 is going towards principal. Now, if you were just to look at current interest rates at 3.25%, let's say for numbers, and you had a little bit of that paid down, we're refinancing back at a $300,000 loan amount, 3.25%. Guess what? The payment drops only $15, but it's still a lower payment than what you had. But you're only paying $813 in interest, and $649 is going towards principal. That just shows you right there, and that's on a 25-year.
So those two differences. That 30 was a $1,400 payment, we'll say roughly.
Right.
1,000 was going towards interest. 400 was going towards your principal buy down. On a 25-year, we were
looking at an $813
interest
and a $649 principal. But the
Wow,
nice thing
guys.
about that is that we're shaving 4 years off the mortgage. That's $48,000 in just 4 years of
Shave
savings.
it off.
and you're flopping 200 or a little over 200 towards your principal buy down, less towards your
Well, that's
interest
where we're meeting there and shaving that off. So, like I said, numbers are so cool when it comes to this. We can really beat it up and look at it and analyze it and come up with a good program, a great idea. You can do this with your credit cards, your car payment, everything else. It just opens up more monthly income for yourself to either purchase, if your kids are going to college, you're like, Christian, I need this mortgage to be paid off by the time my last kid, turns 18 so I can, pay for college, whatever it may be. So when you're sitting down with your advisor, that's why it's so important. We talk about all these life goals because, real estate really does open some freedoms up for people. And that's our job. And that's what gives me the drive to come into work and go over these figures day in, day out, and really find these little areas where we can improve your life and come up with a game plan to meet those goals, whatever it may be. I don't care if you want a Porsche by that time and you're like, hey, Christian, I need to open up this money because when I retire, this is my gift to myself. Whatever it may be that you want to get to, you can accomplish it through just simple math. And that's what's exciting about this.
Yeah, that's a really good point. And I think bringing it together, great run there. How do we do this? So a lot of people who are buying a home, Casey, are like, oh, is that something I set up with you or whatnot? Right. Dive in because I know you've had this a lot. How do we execute this from a consumer standpoint?
Yeah. So if you're looking to, set up, extra payments and stuff like that, I mean, one main priority you're going to use throughout having a loan is your servicer, right? Your servicer is someone that, depending on stuff they have, but it's someone you can't contact. You can change.
Servicer, that's the person that you make the payment to.
Yeah, exactly. Sorry, let's clarify. The servicer is the person you are making your payment to. So that person you are making your payment to will have different options for you. You can set up your payment to maybe it be a bi-weekly, or you want to add in, like Addie was doing, an extra 200 to 300 on top. These are options that you will be able to review and look at. Before you get there, though, you do want to sit down with your mortgage advisor and strategize and map these out and figure out, what would be that comfortable extra payment for you, because instead of just jumping in and saying, hey, we want to start with an extra $500 a month, maybe it was a little bit more comfortable to start at the 300 and then progress later. Now you can go back and change stuff. So it's not like you're locking in, but like Addie's saying, it's not as hard as you might think to set these in place and make extra
literally
payments.
like, guys, it's not even that complicated. You call, you set up for your first payment, right? And they're like, how would you like to make that payment? You're like, well, through my bank account.
Right.
And they'll give you options. They're like, bi-weekly. Do you want to apply extra to the principal? Do you want to set up automatic withdrawals? Do you want this to be on the 1st, 3rd, the 15th? And most mortgages have actually a grace period up to the 15th. So I always explain it, hey, it's a grace period from the 1st to the 15th. I never advise setting it up right for the 15th because things happen, natural disasters, technology, whatever.
Right.
But you can adjust that to be for when you get paid. So say you get paid on the 3rd, right? Maybe that's when your check clears from your employer, right? And then you set up that automatic payment for the 4th. Boom, it comes through. But set it up. And here's the best advice I've ever freaking given to myself and it was by accident. I accidentally lost like my passcode to my servicer. So I can't get in right now to change anything because I can't pass the security questions. They're so hard. Like they're asking me stuff like my phone number from high school. And I'm like, that little Nokia brick that I played Snake 2 on in chemistry. I don't remember that. But anyways, I'm stuck on that extra payment, and it's good because we're all human, guys. So we all have temptations and justifications, and we'll talk ourselves out of making that extra. Like things come up, oh, the baby needed this, or I went a little overboard on Grubhub, or I bought that extra thing on Amazon. We've all had that Friday night buzz Amazon purchase. Yeah. Oopsies.
A little forced discipline, it sounds like.
How did a 2-person hot tub end up here on 2 Prime?
By a click of a button.
So, I mean, bringing it all back together, though, it's like you got to commit, and get in there, talk to them, set it up. And if you can't do it, I would say just try it right off the bat and put yourself into a position because it's incredible. And not to get too heartfelt, it's incredible how we adapt as humans to certain financial situations and you just make it happen. And that really does roll over to our second point. We've got a few points here, but the second point is what type of changes could you make in your personal life to then extend over and apply to the principal, Christian?
Yeah, that's a great point. So I have clients that have come for this advice, and we've set up these programs and plans. And some of the things that come up into play is that, hey, okay, I'm going to start taking my lunch to work. I'm going to go to Starbucks, maybe once a week versus 5 times a week. The little things that you can change in your personal and daily life can really affect this. So what happens is you start playing a game, and it turns into a fun game watching that principal go down. You're beating up that principal. You have a goal like for that year. Hey, I want to pay an extra 2 mortgage payments, or I want to pay off another $3,000 this year. And so as you're making those decisions at the grocery store, getting those gummy bears or whatever, you're like, oh, do I really need that?
That was like
those gummy bears might cost me, $500 because I could have that $10 bag of gummy bears through compounded interest for 30 years.
That's the difference of someone that
so
looks at
it's a change.
Yeah.
It's a change of thought. It's a discipline. But as Americans are going farther and farther in debt, we need to reverse this. And we have to have new psychology on how to pay bills, how to look at interest, and use it towards your advantage. Yeah, we're okay with paying a 19% credit card bill. Let's strategize. And so we don't want to be in the blind anymore. We just put it in front of us. Let's take our own finances in control and put it in our own pockets. And man, it's a fun game to play.
It's a fun game, and I think another add-on if you're just looking to save stuff, because like a powerful statement is $10,000 typically, whether $10,000 reduced or increased on your sales price of the home or your down payment, typically moves the needle on a 30-year fix by about $50, give or take, right? Estimating. That being said, how much easier it is? What's easier, saving 10 grand or saving $50 on your financial spending habits on a monthly basis. Are you kidding me, Casey?
Great point.
I'm not kidding you.
Come on, I see you drop 50 just by mistakes every day.
That's like my wife. She's like, hey, just cut out the happy hour, Casey, and we're just
Yeah.
cutting down the mortgage constantly.
Yeah, the COVID situation helped you on the budget, eh?
No, definitely. I'm saving tons.
Well, there's tons of people. You're not the only one. I've heard that from multiple clients. It's like, hey, we've been able to save a lot more cash. And
You really are seeing that in the market. I mean, people are saving more. You know, they're not spending it on those extra things that just jump out at you. It's easy to go Friday night to Chick-fil-A and get the.
oh my gosh, I haven't had Chick-fil-A yet.
I still haven't either.
All right, so it's easy to go Friday night to McDonald's and get yourself the Big Mac. And
You're the first person I've ever talked to that a successful Friday night's described with McDonald's in the same sentence.
That's true. Well, yeah, the kids they like those double cheeseburgers.
Oh yeah, those kiddos. Do they get them Happy Meals? What's the toy right now?
Yeah, what is the toy? I don't know. They got stuff out there.
Remember?
New Milani's coming out, so maybe it's
Yeah, Mulan.
Oh yeah,
Mulan.
Mulani. Remember when the Beanie Babies were the big rip?
Yeah, but people were making money on those things. I mean, they collected the whole chain, and it was like, there it is. You made $15.
now
Big
they're worth
cheddar.
0.
Yeah.
Big
Overstock.
cheddar.
But let's get off the fun stuff and back into the real talk. How we cutting down these mortgages more? I like the idea. I mean, if you guys, even the simple Starbucks stuff, guys. I mean, what is that? Like $5 a day if you're really buying a coffee. I mean,
Starbucks is huge.
yeah, at 25 a week. Now you're at 50, 2 weeks. You know, all of a sudden $100 a month.
Lunch.
Right, lunch.
All those people working remote now.
Yeah.
What
gas?
are you doing
You're
with
saving
that
on
money?
gas?
Gas.
Gas. That's a big one.
Yeah,
Now that
that's
you're
a big
working
one.
at home, you know, that
Yeah.
gas bill has gone down. I know insurance has dropped a lot too. My car insurance has gone down.
Literally, they're sending
You
me
can
empty
find
updates.
so many different ways to find $100 in your monthly budget a month and just put that towards your principal and see that $100 save you thousands of dollars down the road. You know, you just got to change your mindset of how you're doing your finances.
What are you
or
applying it to?
purchasing.
Where are you putting the savings toward?
Yeah.
I think that's a big one. Set a goal.
For sure.
Set a goal to save. Set a goal to apply to principal. So to review, hit up your servicer, the person you're making that mortgage payment to, and make it happen. Make it happen, guys.
And I think I got a little visualization here for you, a little visual. Here we go. This is going to
my
be nice.
gosh.
Let's move some stuff here. But
I'm
it's a good way to
worried.
look at this because, like what we've been talking about, right? You can chop down your mortgage, and the goal would be, you know, obviously to try to get that paid off as quickly as you can. But let's
For
just-
all those podcast listeners, Casey's about to present a Sharpied picture onto
A legal pad.
Yellow
legal
legal
pad.
pad.
It looks good. It's literally just a graph, and it just shows just a natural curve. You know, we're just starting with your purchase price up here on the left-hand side, and we're curving down to 0. All I'm trying to paint the picture here is you create an equity gap naturally in your home by just making your payments every single month on time, right? I mean, you make a payment, whatever. Like we said, if it's $1,000 at the interest and $400 at principal, at least the $400 is paying it down, right?
Correct.
As you pay off more, you know, it's going to lower that principal faster because you're putting more towards it. Your home's going to naturally appreciate. So all we're just showing here, guys,
Here it
for the
comes.
podcast listeners, you can't see
Jeez
this. I'm
Louise,
sorry,
dude.
but you guys can see this thing. So it's like you have your $500,000 purchase price at the top, and you put $50K down. So you started with $50K equity, right? And here's your natural curve from year 0 all the way down to 30 here at the bottom. Can you guys see it? So that's your. We're just gonna. For
Our
my
podcast listeners can't see that beautiful drawing, but yeah, no, you're right. Look
but
at
so
this.
we got
This
an
is
equity-
quality stuff here.
We got an equity gap. Now just check this, podcast listeners. All I'm doing is drawing a little stair step.
Oh, here we
down
go. The NFL play.
Yep. This is all we're doing here.
Yeah,
He's
we're
going
gonna-
for the whiteout.
Yeah, we're going triangle offense here. On the flip side, we're going to kick it out. He's not open. We're going to pass it to the right.
Pass to the right, and we're coming back. So all this little stair step, guys, out there is those are your just extra payments you made every time. So every time you're making those extra payments, you're chunking it down. You're just creating a bigger gap than you naturally had curving. And now we call this an equity position strategy. And you're either paid this off faster or you created a gap now where we're accessing that equity to do something else with you. And that's all I wanted. That's all I wanted to get
all
out
I'm
there,
going to
guys.
say is I was giving you a hard time, but that was really well done. And outside of a coach hoodie and an actual whiteboard that you could erase, that's some sideline coaching.
Yes, sir. It is.
Absolutely well done. And I think that's a great segue into a short break because we've got a lot of listeners who are not watching.
Yes, we do.
And we had a lot of people reaching out last night through our text line, the VIP line, and asking, for our input on their loan estimate and if we would be willing to work with them. And of course, we always got your back. If you need to flip the script and work with a trusted team, MLO has your back. But if you are not watching us, check us out. We got Facebook, MLOpodcast.com. That's where you can hit us up. You can see all of these episodes recorded live in the MLO broadcast studio.
All three of our faces.
All three. Well, sometimes one.
Sometimes we roll, two-man
because like
show or
last
whatever,
episode, Christian had to cover the desk and he was on it.
Sometimes one of us has to be working.
This is very true.
Can't just be all fun, guys.
Slide in that background music, but I just want to throw together, guys. We have your back when it comes to anything financing. You want to refi, you want to purchase a home, you want to sell a home, have a consult with us. Hit us on that VIP text line. One more time for the peeps case. Start us off on the horseshoe.
503
VIP
9038.
9038. And don't forget, guys, we have your back when it comes to anything financing. And if
someone's going to reach out to you because it comes to all three of us.
Oh, yeah, we're hot to try. Whoever's got the finger and the ability, we're going to hit you up and we're going to be there for you. And if you haven't listened and you're a watcher, you're a viewer, you're on there, get on that Apple, Spotify, Stitcher, wherever you grab them podcasts, we're at it. We're there. Boom. That was perfect.
That was.
Nicely done.
That was.
So make sure that you subscribe, like, review, because that really helps us, guys. And the more viewers, the more audience, the more we can support the culture of MLO, which is creating an environment of transparency. Knowledge on the inside track of people that are closing homes, because we all know that some of this knowledge, some of this terminology is just overwhelming, right, Case?
And it doesn't need to be behind closed doors, guys. We want this to be an open door policy, right?
Yeah, open the door, right, Kempers?
Just open it. Open it with all the dust flying off and everything. It's like the closet from Narnia or whatever. But but we want it to be, a show that honestly, guys, you guys have concepts out there we're not talking about or stuff you want us to talk about, send us the message.
Yeah, folks, this is your show. We're just here to support you and give you a place to answer the questions you have about home ownership, refinancing, or just, starting your portfolio of homes that you want to get into and be an investor. We're here to talk to you and get you set up to start that process.
Mm-hmm. Yeah, most definitely. And let's roll into our last point, guys. Well, it's it's a Friday.
It is
We're
Friday.
so respectful on Friday. Who what?
Friday.
If you're into that.
If you're into that.
That's his line from another episode. But I would say one of the biggest factors, guys, is understanding the down payment as the last one. Down payment, there's some big benchmarks that can save you money. And the mortgage insurance premium gets adjusted per the down payment. It's one of the biggest factor. Credit's the other one. But that being said, let's roll into CK down payment affecting how much you can save with the longevity if we're taking the approach of applying additional funds toward principal.
Yeah, great point. So with conventional loan, we know that your mortgage insurance can be dropped once we meet that 20% equity position point. So we're working to not only, basically just get that, principal paid down so we can meet that threshold, but we have equity growing up every month as well. So it definitely will help you out there. And with the FHA loan, we're wanting to do the same thing so we can convert you into a conventional loan, open up those funds for new home buyers in the future, and get you off that mortgage insurance and put you in a better situation as well. So, making sure that a refinance is a good position for you, but you can help that process and get yourself in a better situation by doing those small little things that we talked about, being disciplined on your ways to save and adding towards principal. But it's mainly that discipline and having the knowledge of understanding of where you need to be. And then that way, when you call me in a year and a half, and you're like, Christian, I think I've met that point based off of Zillow. My house is at this level. Man, I did everything you said. We're there. And it's so exciting once a client does make that phone call to you, because you're like, wow, they actually did the homework. They put in the time. They listened. And it's such a fulfillment for myself as well. Yeah. I just can't say enough about that. But, man, now we're in a better position. they even may be in a position to pull out a little equity to buy their next, investment property. There's so many different things that we can do with it. So, yeah, that's a huge point.
I like the line, Casey, my favorite one from Christian right there. Be disciplined in the way you save. Be disciplined in the way you save. Because it's like one of those things a lot of people will find, like, it's the reverse of people who get a raise and then they increase their overhead of their lifestyle. So a lot of people refinance and lower down that payment, and we're in a refinance market. And then they're like, oh, great. Now I can buy this. Right. Now I can do this. Right. Now I can, afford whatever more that I couldn't prior. But we really encourage people to accelerate the process of paying off the loan and accelerate the process to getting to retirement. That motivates me. I want to do what I want 24/7, right? Right. And taking that $100, $200 monthly savings and applying it directly to our principal takes discipline. So analyze that 30, 20, 25, 20-year fixed and how you could apply it toward principal. And then could we drop off that mortgage insurance on a refi? Because that right there, you're seeing a lot of rate reduction savings, but maybe you're saving $100 to even $300, $400 in monthly mortgage, and your credit score might have gone up, which reduces that premium. So even if you can't get the appraised value to what you need to fall off on the MI could drastically drop, right, Christian?
Yeah, you could be at your mortgage insurance could be, you put 5% down when you purchase the house. So your mortgage insurance is going to be at higher risk, going to be higher. So you're at $350 payments. Yeah, now we got you at, 85%. Well, that $350 just dropped down to $90. That's still another, $250 monthly savings there. So it's just looking at everything. Don't be scared to look at your options. I think that's a lot of people, I'm just not ready. It's not there yet, Well, you don't know unless you go through a consultant, here at MLO and find out what those figures exactly look like.
Yeah, and once again, hit us on that VIP line. If you do need help, you need a second opinion, right, KZ?
Yeah, for sure. And I think consumers just need to be realistic and say what it is. It's like, I really want to get a new car. Like, I really do. But
and there's nothing wrong with that.
At the end of the day, it's like, say what it is, though. What you are really getting is more debt. So do you want more debt or do you want less debt? Do you want to be living there trying to burden that every month? I mean, yeah, we want it new. We all want it new, but say what it really is, because new is just more debt. So we're saving you money here. We saved Addie a couple $100, but if he goes and flops that into a brand new truck payment, all he did was add more debt.
Well, I keep having to buy you lunch, so it's ruined. No, I'm just joking.
So what I'm doing is I'm saving money.
Well done.
Nicely played. But in all seriousness, guys, this was just part one. We're going to roll out a part two on how to pay your mortgage off early, because we're going to talk about the 30-year versus the 15 and the 20.
What if you bid off more than you can chew, guys? Like on the first step, you didn't have us around, so now you're in the big house right now. Like, we bid off more. What do we do to try to get out?
You're choking on the fat, and you need someone give you the Heimlich.
Maybe we downsize? I don't know.
We got a lot of different strategies we can play with that one, and we've been doing it here in the last couple of weeks here at the MLO. So I've had clients, they were on a 15-year, and now they're like, hey,
it's too much, man. Should we back?
Well, it's because their 15 years were at 3.625 when they can go to a 30-year, still a lower term. So it's different. So timing is so a part of your strategy. Where interest rates are at that time. It's going to really be at the play on your current monthly payment and what might be in the future for your refinance. So it really depends on so many different factors.
Well said.
And
time.
I need a beat.
You need a beat. Let's bring off the popper. I think we should bring a little slide for the close.
Yes, sir. It's new. We'll feel it.
Little remix and the flip button hit. For everyone listening, you can't see us. You should go on. I think we're pretty entertaining, but
for the most part,
we'll slide it around, guys, as we close out.
You want to do a little recap?
Yeah. Little recap from the top. 3 ways to save your mortgage on part one here at MLO. You're going number one. Casey, give it to us.
Why don't you just throw a little bit more at your principal every month?
throw it at your principal, throw it direct, and it's not hard to do. You call the person you're paying.
Sling it around, toss it out there, see what happens.
Number 2, I'm going to let Kempers take us on saving money. Cut back.
I want you to be disciplined with your savings. That's the key word for me today. Discipline, savings. Be strategic. Figure it out. Write out a budget. What's a budget? Does anybody know what a budget is anymore? Well, put down all your monthly bills on a piece of paper. See where you can save. Get on strategizing on how you can make those savings. Back to Casey's point, let's throw it back towards the principal and watch that principal go down and interest will fall off as well.
It's a mindset, guys. It's a disciplined mindset.
And rounding out the uno dos tres, we go number 3 being...
Well, you just, look at your options. We have refinance options. You have term change options. You have different strategies you can use for loan programs. So that's something you need to sit there and talk about with your MLO advisor or trusted advisor. What are your options out there for either the current loan you have or other programs out there?
Yeah, breaking down payment if you're purchasing a home. Is it 3% as a first-time home buyer? 5. What does 5 to 10, 15 do for you? And if you're in the refinance market, could I drop off that mortgage insurance? Has my credit score improved, which could lower my rate and lower my premiums, and I could take all those bundling savings, and I'm building up to the beat here.
Yeah, you are.
And put it right to that principal, getting you closer to retirement.
And it drops down.
Dropping.
That was perfect.
Gosh, I'm going to bring back an old saying from the earlier episodes. You've never had this much fun talking about mortgages. I guarantee you that.
That's right.
So let's X out, guys. Bow out. Stage right, left, whatever they call it. Remind them one more time, we have so many different platforms. You can reach the MLO team. We're on. Casey, tell them where we're at.
Wherever you're listening live, get us on all those podcast platforms, iHeartRadio, Spotify, Apple Podcasts, and all the other ones out there.
Wherever you grab them podcasts, Weeby and CK, give them a farewell and a thank you and goodbye.
Have a great weekend, folks. Thanks for listening and keep downloading. Appreciate you.
Happy Friday, everybody.
Happy Friday. Hit us up, guys. Review, subscribe, follow, share. Tell your people.
Tell your
How about
peeps,
that?
man.
How about that for a call to action? Tell your people. MLO. It's 3 little letters you can tell your friends. That could change their lives.
Just 3. MLO. That's it.
So freaking good. I want to do a little horseshoe closer here, guys. Casey, thanks so much for being on today, man.
Yeah, thank you. And thank you, everybody out there. Obviously, everyone, dealing with stuff that's still going on in this world of pandemics and riots and stuff like that. So just thank you, everybody. Thank you, everybody, for all listeners. And we appreciate you.
We do. And Mr. Kemps.
It's always great to be here with you guys, getting this information out. I think it's just another great topic that a lot of people are asking for advice on. So thanks for listening, and we're here for you guys.
Yeah, and to close her out, my name is Nett, and I am your host of the podcast. Bring it, boys. MLO. And if there's anything we can help you outside of the show, hit us up on that VIP number to close her out. Casey, hit us on the start.
503
VIP
9038.
And until next time, guys, we will check you later.
Yes, sir.